It's time for Under 30. We are looking at all things Redfin as it is falling today on some disappointing May housing numbers. So here to tell us more on that report, I'd like to welcome in George Tsilis, senior markets correspondent for the network. So George, I mean, this was a really interesting report if you're interested in buying a home, which I am not, but I would say now I'm definitely not after reading some of these figures that were like 40% below pre-pandemic levels in terms of inventory.
Yeah, I mean, that's the thing. This is a really bifurcated market. I mean, the home builders, from a stock standpoint, have performed well. There's obviously still a shortage of homes, but we know prices have stabilized, but they're still very expensive, and the cost of ownership is just going through the roof, particularly mortgage rates, which are now, plus 6.5%, close to 7% at some point in time in the last year, compared to, a little less than 3% back in 2021. That's been a huge drag. There's still a shortage of inventory. Prices, as actually reported by Redfin, for the month of May, were down about 3% year over year, but they've really stabilized. But the challenge is the turnover. Redfin, which again is a business that's affiliated with generating revenues from buying and selling homes. In other words, listing homes on their platform, and of course, listing them with an incentive with lower seller or agency fees. That's their whole premise of their business. But when they reported their first quarter Q1 numbers, they demonstrated a decline 47% year over year for Q1, and May also showed a decline in home sales by 7%. I mean, just think about these numbers. They actually reported some pretty good data. 1.4 million homes were sold or available for sale versus 2.2 million back in 2019. So there's a significant shortage in homes, and that's really crushing, I suggest, real estate brokerage firms like CBRE, Redfin. We know Zillow is in that mix. But the home builders are still doing quite well because home builders really are price setting the market, and effectively, especially those home builders that are selling at the median price levels, they're actually still in high demand. But I think affordability is still a challenge, and of course the lock-in conundrum, which is those who secured a mortgage prior to last year are really stuck unless they actually buy a home in cash, effectively, or downsize. There's really no upsizing demand right now because of higher mortgage rates, again, unless you're an all-cash buyer.
You bring up a good point, George, about the fact that home builders are doing much better. We saw that over the past couple of weeks with the past few home builders that reported earnings, right? And so is the outlook at this point much better for new home builders than it is, or I should say for the new home industry, than it is for the rebought or renewed home industry?
Definitely. I think the existing home industry, existing sales are going to struggle for quite some time just because of this lock-in phenomenon. I think people feel trapped in their homes. There's probably a reluctance to move, again, unless you're downsizing, which again can create some additional supply in the marketplace. But I'm just talking about it from my experience and anecdotally. There's just very few homes for sale that I see relative to maybe 2 years ago. And I think it's really because people are scared to leave their low interest rate mortgages for higher interest rate mortgages. There's really no incentive for them to do so unless they're forced to because of job loss or relocation. So I think existing homes are going to struggle for quite some time. But I do think, and you have to think about this, deeply, going back to the periods when there was a lot of inflation in the late 70s, early 80s. That was actually a great time to buy a home despite the high interest rates because of inflation. Inflation is actually good, especially if you're taking on debt. And of course, debt that is tied to inflated assets or assets that do go higher because of inflation. So assets themselves and home prices, I think, will not collapse. I know there's a lot of fear mongering about home prices. I think they'll actually trade better than inflation. But the challenge is right now the brokerage firms like Redfin, Zillow, and other major real estate brokerage firms, just because of the transactions volume that is down, I think those companies are going to struggle. So home builders, I think overall are still going to be robust. Home prices will probably remain stable and trend with GDP growth and inflation. But the volume transactions, I think, are going to continue to struggle. And that's where Redfin really lies. Even though the stock is higher, as you can see year to date, I think about 30%, it's still down significantly over the last 5 years. I think about 55 to 60%.
Yeah, George, that's exactly what I was Going to ask you, because we talk about the home builder so frequently on the show, and ahead of KB Home's report today after the close, I mean, we're pretty much at 52-week highs. Not to say that Redfin hasn't had its decent performance, but it's sort of interesting to look at the relationship between the two. But like you said, it's just a liquidity problem pretty much at this point, because even though people are still naturally buying and selling their homes, it's just not to the degree that they once were, correct?
Sure. That's right. Absolutely. It really comes down to transaction volume. That's where Redfin makes their money, because they're not a home builder. They're not price setting the market, and effectively total transactions are down. But again, because there's a supply, there's a lot of demand and low supply, prices can remain relatively elevated. And lastly, I'll say this about Redfin. Even though the stock has done well this year, it's really a technology services company. And I think that's one of the reasons why it's higher year to date. Short interest is very high at 18%, and the company's still losing money. They're expected to lose about $1.23 in the next 4 quarters, so it implies a negative earnings yield for the stock. So with $300 million in cash, they have, again, about 1 year's worth of cash burn on their balance sheet. So just watch for a potential secondary offering. I think that's potentially a possibility for Redfin, just because they're still burning through cash and not profitable.
George, all I know is whenever I go on Redfin or any type of website similar, I get so mad. It seems like my goal of owning a home is just getting further and further pushed out because, like you said, there's nothing available. Everything's really expensive, and it doesn't seem like it's going to get better anytime soon. So it's just sort of an unfortunate situation for us all trying to then move. Like you said, we're all sort of stuck where we are, and I definitely can relate to that myself. But we'll leave it there. Appreciate all of the insight, George Tsilis, Senior Markets Correspondent for the network.